Hello everyone, welcome to the channel. This is my video in which I will talk about the state of the US market, as well as making some buy and sell recommendations for you in the weeks ahead. Before I begin, I want to let you know that if you want to participate in this money-making process in the US stock market, which is very interesting. I've been here for the past almost 1 year, and it's just been thrilling. Um, if you want to participate, you can use the sign up link in the video description. You will get 3 free stocks if you sign up with Webull using the link below. So if you want to, please participate. First of all, let's talk about the S&P 500, representative of the Fortune 500 companies in the United States. This is the daily chart. This is the candlestick chart of the S&P 500. So you can see this big blob here is the September to November consolidation of the S&P 500, where it topped early September and it pulled back about 10 to 20%. And it was stuck in this range and then broke out after the election, which happened at the beginning of November. Since then, it has been going on an uptrend in this channel. You can see with my 2 lines here. Every time it goes up to that channel, it comes back down, goes up and comes back down. Now, this was yesterday, Friday, 29th of January, where it broke that upward channel. So what does that mean? That means this is ugly, very, very ugly. Where does it go next? There are a couple of cases that it can do. It can either find any support at this area where my cursor is pointing to. So hopefully we'll find some support in this relative area. But I don't see this making new high anytime soon in the next 1 or 2 weeks. Because if you can take a look at this candle, you can see that it made new high during that day, and then immediately came down the day after. So that was not good. And then this attempt to rebound was very weak. As you can see with this wick, that means at some point during that day, the stock was at that level, but then it came down and closed at the lows of the day. So that's not good. And then on Friday, it was just a horrible sell-off. It actually was one of the worst sell-offs since October. So this is not good. I see the US market kind of just consolidating around this area, maybe doing something similar to this. There may be about 10 to 15% correction. I think 10% correction. We have been about 4 or 5%, so we're halfway there. So I think we'll consolidate around this area. Don't panic sell, but just know that this is what's happening. Now we'll talk about the Qs. This is the technology heavy index for the market. You can see also very similar to the S&P 500, so I'm not going to draw anything. But if you just take a look at this candle, it happened on the 25th. This is called, I think it's called a hanging man, but it looks very ugly in the sense that you have a top and a tail here. You have a topping tail here that negates all the gains, and that is a sign of a top for a certain amount of time, and almost certainly it was followed by a decrease in the stock market. So this is not good. I also see this kind of hopefully consolidating around this area. Definitely do not see a rebound to the highs anytime soon in the next 1 or 2 weeks. I think if we're lucky, then we'll consolidate. If we're not lucky, then we'll go much further down. So if you take a look at this candle right here and compare that to this candle right here before the terrible, but somewhat expected September consolidation, where it pulled back about 10%. It's very similar. You have a hanging man, kind of made the new high and just topped right there. It's very similar, followed by a couple of down days. So I think this correction was about a 10% correction. Hopefully we don't see that. Maybe, yeah. Okay, so if we do see a 10% correction, that's going to be around this area. Now that's to the representative index of the tech-heavy market. Contains a bunch of tech-related stocks such as Apple, Microsoft, Amazon. We don't trade the index; we trade individual stocks. But it's always good to see where the market is, because when it rains, everybody gets wet. So it doesn't matter how strong a stock is, but if there's selling pressure in the market, then that leads to a broad market sell-off or correction. Regardless, we do have to make some money. And let me just show you a couple of stocks that I think will be good for the upcoming 2 weeks. Before I begin, let's just say you want to take them lightly. Again, we're not in the best market. We're in a consolidating market. So don't expect a killer anytime soon. So let's talk about some of the stocks that I talked about last week on my Instagram. We'll start with Tesla. I do not have any position in Tesla anymore. I drew a triangle pattern the Friday before last Friday, and I told you that you can participate in this Tesla event. And indeed, it made, I said it was going to 1,000. I thought it was until this event happened. I now, of course, do not think that it will go to 1,000 anytime soon, because again, Tesla is a big component of the SPY, as well as it's a tech-heavy company. So I do see this going down to about 700 or so before it can bounce up again. So be very careful. I've exited my position actually with just not making any money, with breaking even on Tesla. The next stock is LAZR. Lazir, that's how I like to call it. You can see it was forming a wedge here. It broke out of that wedge on Monday. I posted it on Friday, broke out of that wedge on Monday. I think I exited. There was kind of a flash crash on Monday. So I exited that position during that flash crash, so making a little bit of money. But this is not horrible yet. But again, with the current state of the market, I don't have any position in Lazir anymore. Let's talk about the next stock is Fubo. So Fubo, the reason we took it the Friday before yesterday was because of this pattern. I'm trying to draw all the lows. So it broke out of this pattern. You can see it made a very nice run up. I think I participated until about 50. So I made quite a bit of money. I don't have any stock. I don't have any position in this stock anymore. You may guess why. Again, it's because of the market. Current market conditions. So I don't have it. It was a winner for me. I locked my profit, exited. So next, let's talk about VLDR. Recommended this to you. I unfortunately exited this with a loss. So I had a position here. around 23. I made some money going up to about 26. I thought it was good, so I added because I was very certain it was going to about 30. All right, so I added, but then with the last week, with the sell-off, it came right back down. So I exited the position. In retrospect, I could have waited until it gets to about 20 to be my stop loss. Um, but there's some bad news going on with this company. I don't feel comfortable. So, I'd rather take a about $300 loss and then save my money for other stocks. If you're still here, maybe I would wait for about 20. If it drops below 20, then exit. Else, maybe it will come up. Hopefully for you. And lastly, it's Apple. Oh, this is ugly. Apple is ugly. The reason I recommended Apple was because of this. I can't draw a cup and handle formation. So you can see this cup here, right? And then there's this handle, okay? And this level is the breakout level for Apple. It broke out for 5 points. That's not a breakout. And then immediately came down, looked very ugly. It's like if you think about a ball being thrown up to the sky and just free falling downward, this is what it looks like. The further it goes from the top, the faster it is accelerating down. This is what Apple looks like. Hopefully it will find some support here in this area, about 126 to 130, hopefully. And in fact, I do expect this to kind of move sideways from about 126 to about 130 in the next week or so. So that's my analysis on Apple. Now, lastly, in this last part of the video, let's talk about some stocks for the upcoming week that I think you can take for money. I'm pretty confident in these stocks because they are they have high potentials. So NEO, I've been covering NEO for quite a bit. It still looks good, actually. Out of all the stocks in the stock market, it still looks good. You can see this this rectangle is the breakout area of NEO. It topped at the end of November. It consolidated, broke out of this triangle, of this wedge, and it made new highs, about 65. And since then, that breakout level has been the support for the stock. It doesn't go down, it doesn't go down here. So I like it. I like it, even when you can see how ugly Apple was. So I like NEO, continue to like NEO. Another thing that I like about NEO is this moving average 20. So if you have been following my Instagram, I've been talking about the case of the MA20 for NEO. As you can see, the MA20 was support for NEO so this is looking back last year. Every time it comes up and comes down, the MA20 is the support for that stock. It doesn't break below the MA20, the moving average, calculated over 20 days. You can see this here, bounce right back up, bounce right back up, bounce right back up. Okay. It lost that support back in early December, and that became resistance. You can see it tried to move back up, immediately came down, tried to move back up, came down. Now I think that's going to be support for the stock now that it has broken above the MA20. As you can see, it hasn't been going down much further. So if this stock goes down to about 50, that's ugly. But as long as it stays maybe above 54 or 55, I think that's good. Now, keep in mind, maybe this is a little bit too late because on Monday, NEO is going to report the January vehicle delivery. So NEO is a Chinese electric vehicle manufacturer, pretty famous in China. Kind of like VinFast in Vietnam and kind of like, Ford or GM in the United States or Tesla even. So NIO is a Tesla of China. It's actually competing with China. On Monday, in 2 days, it's going to report its deliveries. If it makes a killing in deliveries, I hope this is going to, jump up to, hopefully it will jump up to 65, test the 67 resistance, previous high, test the 67, maybe consolidate around that for a bit before making new highs. I really like NIO as an investment, as well as the technical of NIO. I like a lot of stocks. My love for AMD, Advanced Micro Devices is the name. I like the stock. I like the company. Well, I like the company, but the stock hasn't been doing well. The technicals have been bad. So I'm not in AMD anymore. I like NIO. I like its technicals. So I have a lot of position in NIO. Okay, that's NIO. Let's next talk about this stock, AI. So C3 AI. This has, you've seen this multiple times in my analyses. I like to draw these triangle, this wedge breakout. This stock has been doing well during the last week. Again, last week was very ugly, worst week for the SPY since October. C3 is holding because it broke the pennant. I think it's called a wedge. I'm not sure about the pennant, but it broke this wedge. I see it going to, I'm going to sell about 180, and my stop loss will be 120. So I have a position, I think, at 137, and I'm going to sell at 120. That will mark a loss. But I do see it going to 180, hopefully soon. If not the next week, then the week after. Again, because of this wedge. So that's AI. You can participate. The next stock is EQR, Equity Resident. Actually, I don't like, I don't know what this company does, but it's forming a very nice bull flag. And if you take a look carefully, you'll see kind of a reverse head and shoulder here. There's this resistance level, about 64. Hopefully we'll break that 64, and the target will be above 67, so maybe 68 or 70. Stop loss should be around 60. So I think I have a position at 63 or so. Stop loss 60, target about 67 or 68. I do like this stock. I don't know what it does, but the technical looks good. All right, so you can, actually 70 would be a nice area to take your profit. I think the last stock that I have for you is DKNG, DraftKings. This makes sports betting. I think it is going to make new high so the highest was 64. I think it's going to break that 64 in the next month or so, maybe sooner, because of this reverse head and shoulder pattern. So normally head and shoulder with the head pointing upward is bad. But if it's a reverse head and shoulder, meaning the head points down, that is good. And if you draw the neckline with the line that I'm trying to draw here, it's pointing up. So this is very, very good. I wish I can draw. So this is the shoulder 1. This is the shoulder 2. I'm sorry, this would be the head. See the head here? And this would be the shoulder 2. All right, so as long as it's following that trend, I really, really, really like this stock. I both have a position in terms of stock as well as options. I make a call of above 60 in the next 2 weeks. I think I have an option expiring on Feb 19th. at the price of 60. I do think it's going to go above 60. Again, really like this stock. Reverse head and shoulder. Google it. You see it for yourself. Reverse head and shoulder. Okay, so in this very last part of the video, I do want to talk about some stocks that have been hot out there on the market. Let's talk about GME and then AMC. So if you want, you can read about it in the news about the short squeeze going on in GME. What I just want to tell you is that do not participate. Just do not participate at any cost. If you have $300 you want to waste, or not that you want to waste, but you're willing to lose that $300, throw it in there, let it go to about maybe 500, sell it. Otherwise, don't buy. Don't put like $2,000 in it. You're gonna lose. This is just, it's gonna go down. Whatever comes up, something comes up fast, it's gonna go down even faster. The only way that I would recommend you to participate in this, but you got to have a lot of money, that is buying puts. So put option. I currently hold a put option for GME with the strike price of $80, which is here, expiring at the end of February. What is a put option? Put option is betting that the stock will come down, and on its way down, I'm going to make money. So I spent $2,000 to buy a put option in GME. If it doesn't come down, I lose that $2,000. But I think I'm about 70 or 80% certain that it will come down. So with that $2,000, if it does come down, I'll make about hopefully $5,000 out of that. So a $3,000 profit. So that's my big bet on GME at the moment. It's just, there's no way that it's not going to go down. The other stock, very similar to GME, is AMC. So again, this has been a short squeeze event, has been a war going on between the Reddit crowd of retail investors and the hedge fund managers on Wall Street who were shorting the stock and got squeezed out of it. I don't see this sustaining. AMC was a $1 stock before this all happened. They're now diluting their shares. So the stock price will face more pressures. And the retail investors is not, to be honest, is not going to be as strong as the hedge fund managers. I think it will, eventually the hedge fund managers will win, the big money on Wall Street will win, and this stock will come down. I do see it going down to maybe about $5, even though that's going to be stretch for the stock, but there's no way it's going to hold at 10. So I had a put option very similar to GME. I think you can see here. I call $5 expiring. Ooh, I did not. Oh no, that's not what I have. Let's see, AMC. Yeah, I call for $5 expiring March 5th. So I'm saying by March 5th, I do see this going down to about $5. I think that has a price of about $300. So if I lose $300. If the stock does come down, I'll win maybe about $1,000 total. So my final saying on GME and AMC for you is do not participate, but if you want to, be ready to lose that money. All right. So that is my video for this week. Thank you all for watching. Hopefully you'll make some money based on my recommendations. Let me know how those recommendations work for you. We'll try to improve as time goes on. Thank you very much for watching.